On today's Hot Sheet, I'm discussing Ivy Zelman's housing market predictions, the national decline in existing home sales, and takeaways from the FOMC meeting minutes release. Today is Wednesday, November 22nd, 2023. I'm Byron Lazine, and the Hot Sheet starts now. Hey, honored to be with you here today on this Wednesday before Thanksgiving. Hope everybody is gearing up for a great holiday weekend with you and your loved ones. All right. Ivy Zelman. So we got a lot actually to cover here on a short week. We had the FOMC meeting minutes released yesterday. Ivy Zelman recently spoke. Rarely does this, by the way. Ivy Zelman rarely will get on CNBC. I think the last time in this interview she referenced being on CNBC was like 2007 or something. So rarity that she does this. Why is it important that we listen now if she rarely speaks? Because when she sends out information to the market, she's typically right. I mean, she saw the housing crash coming back in the great financial crisis before everybody. She predicted the mortgage crisis. Everybody talks about Michael Burry and The Big Short. For real estate people, Ivy Zelman was way ahead of everybody else. So when she does talk, I listen. She's got great reporting, and she's built quite the firm with what she does. So I've got the video broken down here so that we can listen and react. Then we'll get into the existing home sales data as well as the Fed FOMC meeting minute. So stick around for the Fed FOMC meeting minute. Hit a thumbs up too on this video. We want to help get the only live show in the market on the internet for housing in front of more people. Obviously, we go live every single day that the markets are open. So this will be the last one here today. We'll be closing out the holiday week, but typically 5 days a week. So hit the thumbs up on that. And let's jump into the video. The first topic would be new home builder incentives from Ivy Zelman. Let's take a listen.
So these numbers, listening to Diana, there are a lot of cross currents because rates are definitely higher. But her point was that some of the new home builders seem less sensitive than they're still building away because the supply issue is still with us. So they can still do this and expect to sell things at these rates. They're not being hurt by this.
Well, I mean, overall, the builders have had more resilient sales. And I think part of that is also they're really offering great value to the consumer by giving mortgage rate buy downs. And that's enabling the buyer to have less stress on affordability. So they're buying rates down as much as 2 points. And that's obviously pretty helpful. They're offering incentives and they've got product. And while they're providing that incentive and that could impact margins, they have product where incremental demand, there's not a lot of existing inventory.
Okay, so this is kind of building off of what we talked about yesterday, where we had the prediction yesterday from Morgan Stanley, in fact, that there would be more new construction, new home sales in 2024 than existing home sales, that's a huge shift from the market we've known the last decade plus, where there's going to be more new home sales that actually happen and take place in 2024. It's great news for builders. Obviously, as Ivy Zelman points out, they're in this power position of being able to not only offer a great product. Think about how many existing home sales do come on the market where it's like, man, the buyer doesn't even want to buy the deal because they need to do everything to the property, in comparison to a new product, which is, up to maybe hurricane standards if you're in one of those markets, or up to flood standards if it's a waterfront property, or whatever the standards are of construction in that market. That new product's going to live up to that, and it's new, right? So it's shiny and glitter and all of that. But then you also have the ability for the builders to work on that mortgage rate, which has been even more beneficial here in the last week as it's starting to come down, certainly well off of the 8 that we experienced just a few weeks ago. Okay, next, Ivy Zelman was asked about existing home sales, which we're going to cover here, the newest updated numbers from NAR. So this is pre the latest update, but we're going to give you that update in just a second. But this is Ivy Zelman's take and prediction on existing home sales.
Rates come down. When do we see, is that going to be enough to get existing sales going again? Will people feel better about it? Has there been a lull because of the rise in rates at this point?
Absolutely.
Yeah.
I mean, existing home sales are right now probably at the lowest since the GFC. If you look at, 4 million roughly existing home sales as a percent of households, it's kind of 3%.
Great financial crisis?
Sorry? Yeah, at the GFC, sorry.
Got it.
Great financial crisis. But I would say that rates today, the average homeowner is more than 80% or below 5%. You've got almost half below 4%. So when you start looking at that, we need a lot further decline in rates to reignite the existing home market. So I think it's going to
nobody wants to move. That's why there's no
inventory. It's a disincentive.
You've got a mortgage below 3 or 4%.
Right.
So this isn't going to work itself out anytime soon. You don't think 2024?
She's going to get in on the next one here to the 2024, 2025 projections, which we should all be listening closely. We're going to jump into that in just a second. If you're just jumping in with me here on the hot sheet and you're like, hey, well, who is Byron playing here? I mean, who is he? Who is he so passionate about with, this super professional woman on CNBC? Why should we be listening to her? Well, Ivy Zelman is a Hall of Fame institutional investor, equity analyst. She's been in the housing market for a long time. She predicted the housing burst, the bubble, the great mortgage crisis during the great financial crisis, as she just mentioned. And here's a quote. Steve Harney tweeted it out. I've shared this before, but if you're unfamiliar with Ivy, every time she speaks, I listen. And here's one of her quotes. We would never suggest that a real estate company could be successful without fully understanding local market trends, but ignoring macro trends or assuming they do not carry the same weight would be an equally erroneous suggestion. In our experience, the most effective industry leaders appreciate the appropriate balance between the two ends of the spectrum, talking macro and micro analysis of the market. This is the type of professional consumers are going to demand moving forward. It's why we started the hot sheet back in January of this year on BAM, and we give it all away for absolutely free. We believe in this level of professional moving forward. Just like Ivy says, she says if you came into her home and you couldn't articulate where the 10-year is and how it impacts the 30-year fixed on a listing appointment, she'd throw your ass out of her home immediately. You're not going to be the agent for her. And as you get up into, as agents rather, get up into higher price points, I think going forward with the environment and the changing environment, these types of conversations are going to become even more important. So I'm very curious to see what Ivy says about the 2024 and 2025 real estate market. Let's see what her prediction is.
Flat, nothing.
Yeah, we're looking at flat. I think the new home market just down slightly, but with respect to kind of what unsticks the market, I don't know. I think you've got the risk of distress. Looking out further, you kind of look at the aging population that would help move some people out. Vacancies would rise.
2026, no. 24.
By 2030,
after 24 is 25. It's much better in 25. And you already in your business, you have to be able to make determinations about something that far off. And
we try.
Yeah, and much better for 2025. A rebound even.
Well, 25, we're looking for a reacceleration off a very low base for existing home sales, only up 7%, but it still would be on a relative basis extremely depressed levels.
So when does the shortage of just new homes or even existing homes, how does that finally work itself out, and what year is that? Or does
I mean, the problem is that land prices have been accelerating. There's been no let up in land. Inflation continues to rise. So with respect to affordability and providing more affordable housing, that really, without any government support, developers just can't pencil returns to provide enough housing that's needed. The multifamily market right now is seeing deceleration in rents because of so much supply that's coming to market. And that's will provide consumers
That's the
some
thing
relief.
you asked me for. You wanted to know if we had the figures on multifamily.
Yeah, on multifamily, how are the numbers there?
I don't. Diana,
we were looking
I was
for
listening, but I didn't hear.
decline.
I didn't memorize everything they said.
We were looking for a pretty steep decline, over 30%, because right now developers with the cost of debt, it just doesn't pencil for them to start.
And this is something I've been big on. Glad she said it. They're looking at a 30% decline when it comes to multifamily construction. You're having this burst of inventory. She talked about the deceleration for rents. That's going to be, something for the consumer, for the renter, a win here in 2024. The gap's going to get wider between the cost of home ownership and renting as the rent prices come down. I'm definitely in alignment with her. I wish what's his name from CNBC did not cut her off. I don't know if you caught it in the beginning of that question and answer portion when she's talking about her 2024, 2025 predictions, which, just to summarize, if you missed it, she said 2024, 2025 is going to be relatively close to the level of existing home sales that we've experienced this year. She's talking about a 7% bump in 2025. So low existing total home sales, total transactions, low numbers for 2024, 2025. This year was the lowest level since the great financial crisis. 4 million is extremely low. That is like the bottom. That's the floor that we typically see for home sales. Now, I wish she didn't cut her off, though, when, I don't know if you heard it, she uttered the word 2030. She was about to get into 2030 thoughts there. I would have been fascinated to hear what Ivy Zelman had to say about 2030. Unfortunately, he cut her off. Bobby, let's go to the home improvement. Go to 435 timestamp. She talks about home improvements. I want to listen in on this. And then she's got some advice for viewers.
Improvements, crappy.
I mean, it's decelerating, it's weakening. And from what our surveys show us, that we're really now below where we were in 2019. So we saw beyond normalization to pre-pandemic. And I think that, it's the consumer
Anything
wallet.
that you say to our viewers, buy immediately, whether it's the builder.
I mean, within housing,
yeah.
I think it's a pretty tough time right now. I mean, we had such a boom. And if you look at where the consumer's wallet, their spending was so significant. They call it the honey to-do list, everything that we did while we were locked up at home.
Yep.
We're just seeing more wallet shifting to other areas, whether you talk about hospitality, travel, service. It's just not in the housing market as a priority.
When rates go up, it's just bad for housing.
Yeah, it's bad for housing.
This is a terrible.
All right. Whoa, Bobby. Good job on the X out of that. So love listening to Ivy Zelman, but she's in the mindset there that we need a lot further decline in rates to reignite the housing market. Okay. So that being said, we are seeing mortgage applications increase. This is 3 months now straight. Mortgage applications in the last week increased 3%. As they're coming down, we're actually seeing an increase. I'm sorry, in the last 3 weeks, not three. I think I said 3 months. The last 3 weeks, we've seen mortgage applications increase. So coming off of that low level in October, when we hit the 8%, we broke 8% on the 30-year fix. We're now seeing applications increase as we get off of that. And we're actually, significantly below 7.5 right now on the 30-year fix. But Ivy Zelman believes we need a lot more of a decrease or decline in the 30-year fixed to actually see sales in the existing home market reignite. Speaking of the existing home sales, according to NAR's release here just yesterday, after we signed off of yesterday's hot sheet, existing home sales receded 4.1% in October. So this supports what Ivy Zelman was sharing with us. Existing home sales descended 4.1% in October to a seasonally adjusted annual rate of 3.79 million. She was talking about 4 million in the interview on CNBC. That's the number we've been referencing. 3.79 million. It's really, really low. Okay. Sales slumped 14.6% from 1 year ago. The median existing home sale price climbed 3.4% from 1 year ago to 391,800, the fourth consecutive month of year-over-year price increases. This inventory continues to shrink. You see that. Although inventory has the last couple of weeks, last couple of months even gone up, you still have a really low inventory level, and you're seeing these prices go up. The inventory of unsold existing homes grew 1.8% from the previous month to 1.15 million at the end of October, or the equivalent of 3.6 months supply at the current monthly sales pace. They're 1.15 million at the end of October, is well off of the number we report every Monday using Altos research. Active listings is, in the 470,000 range. That 1.15 million includes the pendings and the escrows. That's the way NAR does it. I don't love that number, but that's just how they do it. Being below 4 million on a seasonally adjusted basis is something that, speaking of housing wire, something that Logan Mohtashami just couldn't fathom going into really any market, breaking that 4 million. We rarely ever have seen existing home sales drop below 4 million. Like I said, that's kind of the floor. And now we're at that level where we're at 3.79 million. So it is going to take, to Ivy Zelman's point here, some time to get back. I mean, just think about 2021, during that peak, we're 6.5 million existing home sales. Now we're close to 3.5 million. So almost carving out 40+% of the existing home sales market as we knew it just a couple of years ago. Prospective home buyers experience another difficult month due to persistent lack of housing inventory and highest mortgage rates in generations, NAR chief economist. Multiple offers, however, are still occurring, especially on starter and mid-price homes, even as price concessions are happening in the upper end of the market. Love to know your thoughts on that here. And happy Thanksgiving to everybody. I see you guys chiming into the comments. Happy Thanksgiving. Hope you guys all have something really amazing planned here over the weekend. Have some good things planned to recharge. But let me know what you're seeing in the upper end of the market. I'm definitely seeing that across a lot of markets where that luxury price point is falling. Here's Logan Mohtashami. Home sales peaked in 2005. And you can see here on the chart for existing home sales where we're at. I mean, 3.45 is where we got on the double. Remember, the market didn't bottom in 2005. Bottomed in the Northeast. It actually bottomed in 2012. This is showing 2011 bottom. But it bottomed out in 2008, then popped up in like 2009. You had some investors kind of go in there and grab some of these properties, seeing opportunity. You see 5.44 million right after 2008, then dropping all the way back down to 3.45 there just before 2012. And that might have been different in your market. Like I know in the Northeast, 2012 was essentially the bottom for prices and for sales. So we're down in that level that we rarely see. I mean, if you look across since the year 2000, there's only a couple of small pops that we've dropped below 4 million there. So there's just obviously the couple of months we hit 4 million during COVID. We're there now. And then the two time frames, obviously the great financial crisis, and then that double bottoming of the real estate market after the great financial crisis, really still part of that. So you can see here that we are rarely in the territory of existing home sales that we are in right now. Thanks for sharing that, Bobby. I was actually looking for the same thing myself, and you found it. So I appreciate that. All right. What we did not find yesterday when Jerome Powell spoke was really any significant news about a lowering of rate. Jerome Powell and the FOMC meeting minutes were released yesterday, and the Fed's stance on interest rates. Federal Reserve officials, as per The minutes of the recent October 31st, November 1st meeting expressed reluctance to cut interest rates in the near future. Okay, so not only did they not say they're thinking about rates, they have expressed reluctance as to cutting the rate. The hesitation is particularly evident given the ongoing concerns about inflation surpassing their 2% target. The inflation concerns, the minutes reveal that the FOMC members are still worried about the persistence or the potential increase in inflation. They emphasize the need for a restrictive policy until data convincingly shows return of inflation to the 2% target. So this is nothing new to our ears based off of where we were, with Jerome's conference that he does after immediately after the meeting. These minutes are reflecting that. So it's really no difference from what we covered, and we cover those conferences in their entirety. And in fact, we timestamp every single time he mentions housing. You can go back and listen to that. It would have been on November 2nd, right? If the meeting ended on November 1st, it would be November 2nd this month. The next meeting is going to be in mid-December. I believe it's December 14th and 15th when we'll be covering the next meeting. Market expectations. Wall Street sentiment suggests a belief that the Fed has concluded its interest rate hikes. Right now, they are factoring in just another pause here in that December meeting. Traders in the Fed funds future market indicate a virtual certainty of no further rate increases and are even pricing in the possibility of cuts starting in May. Okay, that'd be earlier than some of the other projections I've seen, which was second half of 2024. May would be just in front of quarter three. The market expects the equivalent of 4 quarter-point cuts before the end of 2024. So that would amount to a full point, right? If I've got my math right here, 4 quarter point, 4 times 0.25 would total 1 point reduction by the end of 2024. That'd be a boon to the 30-year fixed heading into 2025, when we do have projections of the lowest mortgage rate here over the next 18 months would be 2025, not coming up anytime soon. But we could see some more price reductions. Sorry about that. Reductions on the 30-year fixed in the short term, I guess we're not going to be able to look at it. I'd love to show it to you because the 10-year is in that place that I said yesterday. There it is. Perfect. 4.386 on the 10-year treasury. So we're back under 4.4. That's a beautiful number for us and should help continue to push the 30-year fixed rate down. Yesterday, we ended the day at 7.33. So loving the last 4 reads here from 736, 737, 738 to 733. Not only consistency, which the market likes consistency, but a consistent level below 7.5. Imagine a lot of qualifiers out there can go and get a rate right now at 7.25 or even less. Maybe you're even seeing some folks qualify at 7%, or maybe even the magical mental number of 6.99. Rates trending in a right direction right now. We know how volatile they can be as of late. What's not volatile is if you lock into BAMX today. To get the most out of our BAM content, join BAMX. The price goes up on December 1st. When the price goes up, it's going to double. We basically have this thing priced at a give it away, like just give it to you for free. It's literally coffee money. You get 10% off using code HOT. Do not wait on this. Price will go up double on December 1st. It will continue to go up from there. We've just been packing in so much value since we started BAMX in April. Every single month we upload new courses. Every single month we do new live streams. Every single month we're adding more content into the community. Every single day we drop in the daily downloads from this show. We're going to start releasing our minutes from each show, the hot sheet meeting minutes, or the hot sheet notes rather, to BAMX members. BAMX members also get first dibs on every single event. We've got a bunch of them planned for next year, and they get massive discounts on those events. If you get in now to BAMX before December 1st, you're grandfathered on that rate for the lifetime of being a member. So this will be the lowest price ever. Get in today. Use code HOT to get 10% off of BAMX. December 1st, prices double, and they will continue to increase from there on out. For those of you, hey, Devin and Dustin from Fox Homes team, thank you guys for subscribing. Let me know in the Facebook community once you've had the chance to get in there and check out some of the content. Let us know what you think. And our belief with BAM, with this media company, is if it's an article, if it's something that we're sharing, like the hot sheet, it should be 100% free to everybody. We believe in leveling up the industry, right? Getting rid of really those that just don't want to treat this as a professional. So give this information away for free, so those that do want to level up can level up with us. And then if we're actually showing you how to do some of the things on social or in your business, that's where we can throw it into the course and put it onto BAMX. Have a great community, have great events, and continue to build together. All right. So that's kind of our mindset, and hope you guys are enjoying it. Really hope more than anything that you really enjoy tomorrow. If you're spending time with family, friends, whatever your gig is on Thanksgiving, hope you're able to take a little bit of time to sit back, reflect, recharge, be thankful in a market where there's so much craziness going on, especially in real estate. There's just so much. If you're an agent, there's so much going on. This is, I've been doing this a while. I lived through the great financial crisis. I went bankrupt during the great financial crisis and lost 3 homes, buying homes from 19 to 21. I came into real estate during that second bottom, when the market, that second bottom that we looked at, that 2011, 2012, from the sales perspective. This year in particular has been, I'll just call it the most interesting. The challenges are real. And I'm still super thankful because there's so much opportunity in that for the professionals. It's why we believe so much in BAM. It's why we're investing into BAMX and investing so much time into what we're doing. Yeah, this market's interesting. Yes, this year, 2023, has been wild. But the future is really bright. The opportunity is really big for those professionals who keep investing in. So take some time tomorrow to just be thankful for the opportunity that you have ahead of you. Be thankful that you're a professional. Love to hear more from you in the BAMX community. So definitely give me a shout out, especially if you jump in from this piece of content here on the hot sheet. I'm thankful I've been able to do this show almost every single day that the market's open with you guys since January 1. Thankful for the for those that have the contributors who have jumped in and like last week when I was on vacation and covered for me. But I've been able to do about 8.5% of these live streams each and every single day with you guys. It's been a blast to do it. Really appreciate it. And I can't wait to be back on Monday. We are off tomorrow, of course, and Friday. But we'll be back doing the hot sheet with you guys all on Monday. So happy Thanksgiving. Hope you guys are doing well. Have a great day. And until Monday, toodaloo.